Alrighty, what's up everybody? This is going to be another trade recap video. Today's trade is going to be on Monday, June 30th. Right here, we're starting off at the weekly time frame like we always do. We're going to be looking at our expected weekly expansion. We see price has ran higher, running up through all of this bearish order flow, invalidating it, running up higher into this weekly bearish fair value gap right here, came back down, held on this bullish order block right here, and also supported in this monthly inversion fair value gap. We see that it expands higher, taking out this buy side liquidity, and we do close with a strong bullish candle displacing through that high. It looks like we are reaching towards this buy side liquidity up here. So we are expecting price to reach for this buy side liquidity this week, and we are going to be bullish on the weekly time frame. Now we are down on the daily chart. We have a weekly expected bias. We are going to be now looking for price arrays on the daily chart that could support price in that weekly expansion higher. We're going to be looking at the highs and lows, those for value gaps, so that external range liquidity, that internal range liquidity, and we're going to be looking at what order flow is being created or invalidated here on the daily chart in relation to our expected weekly bias. So right here, this is Friday's close from last week. We can see that price has expanded higher through this buy side. We inverted this daily fair value gap, creating our own bullish order flow right here, and we are still trading toward this high. So on our daily, we are going to consider ourselves bullish as well, just again because we displaced to this buy side, inverted this daily fair value gap. We're still creating that bullish order flow, so we are still expecting price to trade higher. This is a closer look now on the 4-hour. We've broken it down from the weekly to the daily. The weekly, we are bullish. On the daily, we see those bullish signatures as well. So we come down to the 4-hour to see if we have any other key levels that could support price higher for that weekly expansion. Coming down here on the 4-hour, we see that we do have this 4-hour gap right here. The only thing is that I'm not entirely sure what is going to happen once we actually reach that buy side liquidity. I'm unsure if we're going to expand higher and displace through that high, or if we're going to just manipulate that high, sweep it, and then return back within the range. So for my weekly profile, I'm unsure if we're going to be running lower first to then expand higher, or if we're going to be expanding higher first to then run lower. So I kind of note that right here. This is actually my notes throughout the trading day, so you guys can kind of see a little bit of an insight into my thought process as we're going through the higher time frame analysis. And more or less what I'm saying here is that because I'm not 100% sure on the weekly profile in terms of how that expansion is going to unfold, we're going to have to use the lower time frame order flows to confirm or gauge what we should be expecting from price action. So here's the 4-hour. We see that we are still within that 4-hour bullish fair value gap. We have ran higher now, even higher out of this daily inversion fair value gap. So we're still going to consider ourselves bullish. The 4-hour is still looking very bullish. Dropping it down now to the hour. This is basically a closer look of the 4-hour, just to ensure that we are still having bullish order flow. We do see that we are maintaining this bullish order flow as we run higher. We see that we do have this breakish structure right here, but all that did was just push us lower into that 4-hour fair value gap, which then immediately expands back up through the range. So this is going to be what I consider an invalid breakish structure. For example, if we have like a 15-minute breakish structure into an hourly fair value gap, that is just a breakish structure on the lower time frame for a retracement on the higher time frames. So we run all the way back up through the range, displays higher, creates this 4-hour fair value gap. Now we've came back, swept this sell side liquidity within this 4-hour. We do break that low right here, but again, because we have that 4-hour bullish fair value gap, we are going to consider that to be maintaining bullish structure. So all in all, we are considering ourselves to be bullish. Breaking it down now onto the 15-minute, we are going to be going over the framework for our morning session. We can see on the weekly, we are bullish, daily bullish, 4-hour, as we showed, is maintaining that bullish order flow as is the hour. So we are bullish for today on Monday, and that is the framework that we are going to be trading with. Onto the charts now so that we can look at price and watch as it prints. We are here on the 5-minute. Let's take a look real quick back out at the 15-minute chart so we can look at our session highs and lows. See, we have our Asian high, our London high, our Asian low is all the way down here, and our London low actually got taken out right here in this pre-market. So the only real liquidity that we have between our session lows and highs is going to be this remaining liquidity right basically down here. So let's get into the 5-minute time frame and start looking at this price action. All right, cool. So we see that price comes down. We sweep this sell side liquidity right here. We're going to be looking for the order flow around this sell side liquidity. Slight consolidation right here, nothing very interesting. So this is where we have our first point of interest right here. We actually do have a SMT right here as well with NQ. We see that we have now came up, inverted this bearish for value gap. And now we have also changed this state of delivery. So this is a viable trading opportunity right here. We see that we are a bullish framework. We have came down, swept sell side liquidity. We have this SMT confluence, this inversion for value gap, and then this change in the state of delivery. We're going to go ahead and, based on our mechanical model, take this long. Price books up higher into this 5-minute fair value gap. We didn't really expect this to hold at the time that we were taking this trade, but as you will see, it does give a strong price reaction. Price comes down into this inversion gap right here. I saw price support here on this imbalance. Move to the upside, gave me a nice confluence that we were potentially going higher up into those highs. And then what we actually see here is price creates a bearish SMT with NQ. And it sends us lower as so. So that was the first trade of the day. You can see down below that we have minus about $400 off of that transaction. That was the framework for the first trade. This is going to be going over the second trade of the day. What we saw is that we got stopped out right here on this big down candle right here with this very long wick, pushing further down into this 4-hour fair value gap. We ran this morning session low right here for sell side liquidity, and we actually came down into this hourly inversion for value gap and had this really strong reaction, long lower wick not closing below the low. So when I saw this piqued my interest, and we are going to look into the 5-minute price action to see how price formed around this sell side liquidity and look at the entry method. Alright, so let's go over the second trade that I took now. You see that we got stopped out right here on this large ranged candle. Price had this large reaction, dipping down further into this 4-hour, down into the hourly inversion for value gap, sweeping this morning session low at 10:30, and then having that strong reaction closing above the low. So right when I saw this candle, I was still pretty interested in taking price to the upside. I know that we were on a Monday with no news, so I was a little bit more reserved in the setups that I was looking to take. But I did see that we had this strong reaction right here. We swept those morning lows, and we did come back down into that hourly inversion for value gap with that strong reaction. So I did see a potential long opportunity, and I was just hunting an entry from here forward. So what you see down here is that price comes down. We do support right here on consequent encroachment of this wick. right there on 50%. We hold, we have that nice strong reaction. We have this that we are watching. Price closes above. Awesome. What we actually do as well, we did create that SMT. So what we are seeing now is we are seeing this stack of confluences in which we are now expecting price to move to the upside. So we have this consequent encroachment right here on this wick. We had that SMT formed with this low, and now we have inverted this 5-minute fair value gap. So with those confluences, we're going to go ahead and take a long. We're going to take our stop loss, put it right here below that consequent encroachment wick. We shouldn't see price return back down there, and we're going to take price and put it up at these relative equal highs. We see this immediate strong reaction higher. This gives me a lot of confidence that I'm on the correct side of the trade. We do see that we have these relative equal highs up here. If you don't want to shoot for those relative equal highs, you can definitely take this low hanging fruit. But I was pretty confident that we are going to be reaching for these relative equal highs, being that I did think that price was going to run all the way higher up into that buy side liquidity sometime this week. So we're just going to watch price unfold right here. One thing to know, it was getting late in the day, so this is 3:20 right here. So if I didn't have such high confidence that price was probably going to run these equal highs, or for example, if these highs weren't so clean and it was a little bit more jagged, what I would have done is probably take my profit right here, just because I want that low hanging fruit, being that it's getting so late in the day. And I did not want price to kind of hover around here and then return to this 5-minute fair value gap for then it to kind of close down here for the rest of the day. So if price wasn't moving so aggressively, if I didn't think that it was going to meet these relative equal highs, then I would actually close my trade right here. But because I am confident it's going to run higher, I am holding out a little bit for those extra couple points. And then here we see right here, price does run up through these highs for our price target. So this was a really good trade. What you can see down below is we had made up from our earlier loss and about $500 on the day with those two trades. This was that morning session trade. This was that afternoon trade right here. So overall, not a bad day. One win, one loss. Totally acceptable given my risk parameters and my trading model. One thing I will say about this entry for the morning session is I did take this a little bit late into that morning session. You can see right here, this was 11:30. Usually I like to try and have my trades anywhere between like 9:45 and 10:30. This 11:30 right here is getting into London close. So this kind of gets that sloppy price action as we run up into that New York session lunch hour. And yeah, thanks for watching this trade recap. This was June 30th on Monday, and see you in the next video, guys.